So in this video, I'll be going over if these 3 home buying myths are either overrated or underrated, and if they have some merit to them or not, through my eyes as a mortgage loan officer. If you don't know who I am, my name is Esau Vasquez. I'm a licensed mortgage loan officer here in Boise, Idaho, and I help people like you finance their dream homes. Let's get into it. Number 1, you should put 20% down on a home. In my opinion, this is overrated. This kind of comes back to the day where putting 20% down was more feasible. Home prices were a lot less than they are today. So now putting 20% down is much, much harder. Now, you don't even need to put 20% down if you're going to be the one living in the home. You don't need to put 20% down if it's your first time buying a home, second, or even third time buying a home. It's not needed. This is usually said to avoid paying mortgage insurance. However, the amount of time that it would take the average person to save up 20% down on a house would be a very, very long time. And if you got to that point where you got 20% saved up, would you even want to put it all towards a house? Or would you want to put maybe 5-10% down and then invest or save the rest? Lastly, if you have decent credit, mortgage insurance nowadays in 2024 isn't very much per month compared to where it was previously. Here's an example of a monthly payment on a $450,000 house. On one side, we have 5% down. On the other side, we have 20% down. Now, you be the judge if you'd like to put 5% and then save the rest, or put 20% and put all your money towards that down payment. This is based off of the current interest rates of today, so depending on when you see this video, this might fluctuate. Again, you be the judge if it's worth it for you. Number 2, don't buy a car if you're looking to buy a house soon. I call this underrated. Now look, opening up a new credit line or buying a new car won't automatically disqualify you from buying a house. However, it can severely impact how much you qualify for. And if you're currently under contract and you buy a new car, the new credit inquiry can drop your credit score, and that might affect the interest rate that you previously quoted from your lender. Not only that, but the new car payment can put you above your debt to income ratio. So let's say you were previously approved for a certain amount, but now with that new car payment, you might be reduced in that amount that you qualify for. The juice just isn't worth the squeeze in my opinion. Just wait until after you close on the home to buy the new car or open up any new credit lines. Number 3, you need to be at your job for 2 years to qualify for a home. This one I call overrated. However, I say this with a huge side of it depends. You don't need to be at your job for 2 years to qualify. However, a lender does want to see a 2-year history of employment. If you go from a full-time hourly pay job to a part-time or fluctuating hours or fluctuating pay, then we might need to see a 2-year history of that type of income. The biggest thing is that lenders want to see you receiving that type of income for 2 years and that it's likely to continue. I hope this helps, guys. Ask any questions you might have in the comments and I'll try to answer them in a future video.